Welcome to TalkTickers. We cut through the noise of earnings calls to deliver the critical insights you really need.
That's the goal.
Today, we're diving into the Clorox company's third quarter fiscal year 2025 earnings call.
Yep, Clorox Q3.
Our mission, to really distill what matters for understanding where the company stands now and where it might be headed.
So in their latest call, Clorox talked about facing a tougher consumer environment than they maybe anticipated.
Yeah.
Especially late in the third quarter.
Oh, okay.
Macroeconomic stuff, geopolitical uncertainties. It all played a role. Led to some temporary dips in category performance.
Right. And lower sales than they hoped for. I get it.
Exactly. Lower than anticipated sales figures came out of that.
Okay, so a bit of a headwind there towards the end of Q3. But it wasn't all negative, was it? What were the bright spots?
No, definitely not. Despite that pressure, they managed to hold on to their overall market share.
That's key.
And, importantly, they achieved their 10th consecutive quarter of gross margin expansion.
Wow, 10 quarters.
Yeah, that consistent margin growth gives them, continued flexibility.
Interesting. So even with demand softening a bit in places, they're still managing profitability quite well. What did management say about the outlook?
Well, they've updated their forecasts. They acknowledge the ongoing pressure on consumers and on retailers, too.
Understandable.
But they sounded pretty confident in their brand portfolio, their ability to navigate this, uncertainty.
So they're not panicking?
Not at all. They're still anticipating organic sales growth for the full fiscal year and strong earnings growth as well.
And what about the immediate future, say Q4? What's the expectation there?
For the fourth quarter, the current thinking is that categories will probably be down low single digits.
Okay, let's dig into that category weakness a bit more. Clorox usually deals in pretty resilient stuff, right? Household staples, what's happening under the hood.
Yeah, that's what's interesting. These normally stable household categories saw a slight decline, averaging sort of flat to down low single digits, particularly later in Q3. At first, it looked like consumers were just prioritizing food, when they went shopping.
Right, essentials first.
But then it seemed like a broader shift. More wallet share going towards big ticket items, cars, maybe new iPhones, that kind of thing.
Ah, so spending was happening, just maybe not on cleaning supplies as much.
Precisely. Which led to more conservative behavior, you could say, in the household goods aisle. It shows how connected everything is, spending-wise.
So it wasn't necessarily that people stopped needing Clorox wipes or whatever, but they were maybe making different choices with their overall budget.
Exactly right. And despite that pullback in spending overall, the actual at-home behavior didn't really change much for Clorox's category.
Oh, interesting.
We didn't see a huge jump to private label or people just dropping out of categories altogether.
So how did they adjust then?
It looks like they adapted by buying different sizes, maybe smaller packs to save cash up front, or grabbing the bigger value sizes if they could swing it, and just really using up the products they already had at home.
Resourceful. Makes sense.
Yeah, bit of consumer ingenuity.
And what's driving this caution around household goods? Is it just inflation or?
It seems like a reaction to the general news cycle, the economic mood.
Yeah.
And just households trying to manage their overall needs within maybe a tighter budget.
Okay. And looking into Q4?
Well, April trends look pretty similar to that latter part of Q3. Category performance was volatile is probably the right word.
So still bumpy.
Yeah. The expectation for the quarter remains that low single-digit decline for categories overall.
Any sense of how long this softness might last? Is this the new normal for a bit?
That's the million-dollar question, isn't it? It's pretty uncertain. Depends on things like tariffs, the whole geopolitical scene.
Right.
But Clorox seems to believe their categories will stay relatively resilient through it all. They're watching key things very closely, though.
Like what?
Like private label penetration, are store brands gaining ground? Are consumers really trading down significantly? Where are they shopping? And of course, overall consumer confidence.
Gotcha. Okay, shifting gears a little. Clorox has this long-term target for organic sales growth, right? 3-5%.
They do. That's their algorithm, as they call it.
How does the current environment square with that ambition?
Well, that 3-5% relies on categories getting back to, say, 2.5% growth. More normal levels.
Which isn't happening right now.
Exactly. This current softness is suppressing that potential growth. And honestly, the timing for a return to normal category growth is anyone's guess right now.
So FY26 guidance is probably still TBD.
Oh yeah, way too early for that. But the muted growth expected now in Q4, that's baked into their current outlook. It gives you a sense of the near-term picture.
Let's talk tariffs. That's been a big topic lately. What's the potential impact for Clorox?
It's significant. They estimate the unmitigated impact, like if they did, nothing could be around a $100 million annual run rate.
Oof. That's substantial.
It is. For Q4 specifically, the hit is projected to be smaller, maybe $10, $20 million.
Why less in Q4?
Mostly because they have inventory already on hand that was bought before the latest tariffs kicked in.
Okay, so they have a bit of a buffer, but how are they planning to actually deal with that $100 million potential impact long term?
They've got a few levers they're pulling, looking at different sourcing options, tweaking the supply chain.
Makes sense.
Maybe even some product reformulations, finding productivity savings wherever they can, and some targeted, modest price increases.
Targeted, not broad-based.
That's what they emphasize. Not across-the-board hikes, but specific, careful adjustments.
Okay. Let's talk profitability then. Gross margins have been a strength. What's the Q4 margin outlook?
They're projecting Q4 gross margin around 44%.
Pretty solid.
Yeah, very much in line with their full-year average,
Right.
which is tracking around 44.5%.
What's influencing that Q4 number?
A few things. There's some timing shifts in manufacturing costs, helped in Q3, slight headwind in Q4.
Okay.
But they're also seeing stronger cost savings coming through, some favorable other expenses. And then, of course, you have to factor in that initial tariff impact we just discussed.
So that Q4 margin around 44%, is that a decent indicator for the starting point next fiscal year?
Seems like it. They suggested it provides a pretty good sense of the exit rate heading into fiscal 26.
We've heard rumblings about retailers cutting back on inventory, destocking. Did Clorox see much of that?
Yeah, that came up. It happened very late in Q3, and it was mostly limited to their household business.
Just household.
Primarily, yes. And the impact on the total company sales for Q3 was actually pretty small, less than 1 percentage point.
But they expect more in Q4.
They do. A more significant impact from destocking is anticipated in Q4, and that's already factored into their updated outlook.
And is this retailers losing faith or something else?
Clorox doesn't seem to view it that way. It's not seen as some strategic issue or a sign that shelves are empty. It's more like retailers managing complex supply chains, being cautious in a changing environment.
Okay. What about promotions and new products? How's that playing out?
Well, overall promotional activity is kind of back to pre-COVID levels. Normalized, you could say. But there are nuances. Like in their Glad trash bag business, they're seeing more competitive discounting.
So they have to respond.
Strategically, yes. But they're trying hard not to make deep discounting their main growth driver.
And innovation. Are consumers still willing to pay up for new stuff?
It seems so, if the value is there.
Yeah.
They highlighted successful premium launches like Santiva and some new toilet wand products, things that offer a better experience or solve a problem.
Good sign.
Yeah. And they also stressed they offer different pack sizes. Value options right up to bigger packs for better unit cost, catering to different needs.
So the overall value proposition is holding up?
They believe so. In fact, they mentioned household penetration actually increased. More homes using their products.
Let's talk about the ERP system. That's a huge project. How's that transition going?
Still on track is the message. Scheduled for the beginning of the next fiscal year. They're working really closely with retailers on inventory planning for the cutover.
What does that involve? Retailers stocking up?
Yeah, the expectation is retailers will build about 1.5 weeks of extra inventory just before the go live.
As a safety net.
Exactly. To minimize any risk of out of stocks during the switch. And that inventory build is actually why they expect a bigger organic sales lift from the ERP in Q4.
So that Q4 number gets a temporary boost.
Right. And then that reverses out in the first half of next fiscal year, mostly in Q1, as inventory levels normalize post-transition.
And long term, the ERP helps efficiency.
That's the plan. It's a key part of why they're confident in hitting that goal of expanding EBIT margins by 25 to 50 basis points each year.
We touched on consumers shifting spending. Anything more on where that money might be going instead of, say, household staples?
Yeah, the thinking is consumers are making choices within a finite wallet, right?
Always.
And they're seeing signs of increased spending in categories like electronics, cars, things we mentioned earlier. That potentially pulls spending away from staples.
And the logic is that people aren't suddenly cleaning less.
Right. Their data suggests those at-home behaviors, how people use cleaning products, haven't fundamentally changed. So it points more towards shifting priorities in spending rather than people deprioritizing the categories themselves.
How did the different divisions within Clorox perform? Was the weakness evenly spread?
Not quite. The household division actually saw a bigger sales impact than other parts of the business.
Why was that?
Kind of perfect storm of factors. The inventory adjustments hit household harder, like we said.
Right.
There were timing things like Easter timing affecting promotions, weather impacting Kingsford charcoal.
Oh, Kingsford, yeah.
And they were also lapping a big promotion in their cat litter business from last year.
So multiple specific things hitting that division.
Exactly. But importantly, the retail sales, what actually sold off the shelf, those household categories, were generally in line with the rest of their portfolio.
Suggesting the underlying demand wasn't necessarily weaker there?
Correct. It implies the reported sales dip was more influenced by those specific operational factors, not weak consumer pull at the shelf level.
Except maybe Glad. You mentioned competition there.
Yeah, Glad felt it more due to that increased competitive promotion.
Yeah.
But then you look at cleaning, which had strong performance, gained share. So it really varied by category.
Okay, let's just circle back on the guidance for the full fiscal year 25 again.
Sure. So organic sales growth projected at 4 or 5%.
Including the ERP bump.
Right. That includes a 2-3% benefit from the ERP transition inventory build.
So if you strip out the ERP effect for Q4 specifically,
Then the math implies Q4 organic growth somewhere in the 4-8% range overall. But if you exclude ERP, it looks more like down around 3%, roughly.
and that lower underlying Q4 number reflects.
It reflects the persistence of this recent slowdown in consumption they've seen, plus those continued retailer inventory reductions, especially in household.
Can we talk a bit more about the competition, especially in Glad and Litter?
Sure. For Glad, yeah, the pressure's on. A key branded competitor has been cutting prices, sometimes even undercutting private label, particularly on big packs.
Aggressive.
Very. Clorox thinks it might be unsustainable long term, but it's definitely having an impact now. Still, they say the category itself is holding up okay.
Is innovation helping Glad?
Seems to be. They mentioned a new Bahama Bliss launch, doing well. And a big focus for them in Glad is shifting more business to club stores and online.
And cat litter. Always competitive.
Definitely. Lots of strong value players there. Clorox plays more in the premium end and also has a mid-tier offering.
How are they doing there?
Their recent premium innovation, focusing on odor control, is apparently performing well. They also used some promotions earlier to win back consumers after that cyber attack they had a while back, and they say they're making progress regaining ground.
How does a company like Clorox handle what feels like a bifurcated consumer? You know, some struggling, some doing okay.
It really comes down to the portfolio. They have premium options, like the disinfecting wipes or the fancy cat litter, for those willing to pay.
Right.
But they also have the core, value-oriented stuff like bleach, basic dilutable cleaners, things that are very cost-effective.
So they can cater to both ends.
That's the idea.
Yeah.
In cleaning, for instance, they see consumers sometimes choosing premium for convenience, other times opting for value when budget is tight, and having strong distribution in channels like mass and club, where value-conscious shoppers are going, is also key. They're less exposed to, say, drugstores.
What about capital deployment? M&A activity, are they looking to buy or sell anything?
The main message was focus inward right now. Control what they can control, deliver strong earnings despite the uncertainty.
Makes sense.
They're leaning on investments they've already made in tech, that holistic margin management program, and innovation.
So M&A is off the table.
Not necessarily off the table.
Okay.
They said they remain open to opportunities that could enhance the portfolio, but the priority is the health of the core business first.
And they have the capacity if something comes up.
Yeah. Recent divestitures have helped the balance sheet. They have flexibility, strong cash flow.
Yeah.
If the right deal comes along at the right price.
Okay, last big topic, trade down. Are they really not seeing consumers ditching brands for cheaper private label? It seems counterintuitive in this environment.
It does. But they were pretty clear.
Yeah.
Despite all the value-seeking behavior, buying different sizes, using things up, they haven't seen a significant traditional trade down to private label in their main categories.
Why do they think that is?
They attribute it to trust and efficacy. Consumers value that Clorox products work reliably. It's an established trust, especially for essential cleaning and disinfecting tasks.
So performance trumps price to an extent.
It seems so. People might buy a smaller bottle or shop at a different store, but they stick with the brand they know delivers.
Is there still a risk it could happen if things get worse?
Oh, absolutely. The risk exists, especially if economic pressure continues or intensifies. But their focus is on preempting that by investing in their brands, making sure the value message is clear, using the right promotions, and constantly improving the products themselves. Maintaining that value proposition is key.
All right, that's a really thorough breakdown of the Clorox call. Now time for our favorite segment. This is not financial advice.
Always fun.
Okay, given everything we've heard, consumer caution, efficiency drives at Clorox, some pricing weirdness from competitors, here's a thought, purely theoretical, of course.
Lay it on us.
Consider a long position in a company making industrial-strength cleaning supplies. Think hospitals, schools, commercial buildings. Demand there might be stickier, less tied to individual consumer wallet.
Okay, interesting angle.
Pair that with a short position on a home goods retailer that's heavily skewed towards discretionary stuff, fancy decor, maybe higher-end furnishings, things people might cut back on first.
So betting on essential commercial cleaning over discretionary home upgrades.
Exactly. It's just a way to play the themes we discussed. Again, purely a thought experiment based on the call's undercurrents, not advice.
Definitely not advice. Well, that wraps up our deep dive into the Clorox earnings call. We've unpacked the numbers, explored the shifting consumer landscape, and looked at Clorox's strategies.
Yeah, hopefully this analysis gave you some valuable insights into Clorox and maybe the broader consumer staples world right now. Remember, though, this is all for informational purposes.
Please do your own homework before making any investment decisions.
We'd love to hear what you think, though. What are your takeaways on consumer staples in this environment? Did anything from this deep dive stand out? Let us know. Join the conversation.
Yeah, we're always interested in your perspective. Thanks for tuning in to TalkTickers. We'll catch you on the next earnings call breakdown.